have it, the closing bell of the New York Stock Exchange. It ended up a decent day for the Dow Jones. Stocks up, about 200 points.
Wow. The S&P 500 and NASDAQ were flat, though. For more on this, let's bring in Mark Lehmann. He is the Chief Executive Officer at the investment banking and asset management firm JMP Securities. Thanks for joining us. What was driving the markets today? It's not like there was any news out there. I'm being facetious here.
I was going to say, they used to say on Carson, it was a slow news day. This was not a slow news day nor a slow news week.
Not at all.
As you saw, oil hit a low that it hadn't seen in a few months. Clearly, the bond market is telling you that we're in for some slowdown in the economy. And obviously, we saw some other news on some of the crypto front that we've been reading about all week with glaring eyes. Yet the market shook off a lot of that bad news and had a pretty okay week, which I think tells you that potentially we've seen some of the lows that were put in earlier this year, maybe the lows for this type of for this time in the marketplace.
Mark, I want to ask about home sales because home sales fell for the ninth consecutive month in October. They dropped almost 6% from September to October and have fallen nearly 30% over the last year. Should we anticipate this trend to continue until mortgage and interest rates stabilize?
I think so. I mean, we saw some of the hottest markets going into the end of last year. So we're anniversarying some very tough comparisons with the end of 2021. But the rate rises that we saw earlier in this year had not really factored in till we see that in early 2023. So I would expect the slowdown to continue. And just to put it in the vein of historic relative, this is as fast a drop in these metrics. We're talking about 2008 and 2000, which for a lot of the viewers is one of the biggest slowdowns that they remember, the last recessions that they that they lived through. So these are really historic numbers. It may not feel as bad this time, but the numbers are as bad.
But isn't it coming off of those spikes in prices following or during COVID-19 and the pandemic?
It is. I mean, we saw some enormous gains for all assets, right? We're talking about this bubble in assets given the low interest rate environment. So whether it was housing, whether it was the stock market, those are coming, the bigger they are, the harder they fall. Now, remember, the NASDAQ's down about 30% year to date. And when we look at numbers and people talk about this drop in housing prices, 10%, 15%, whatever that is, put that in context of the NASDAQ, it sounds about on par. So it's a drop in all asset classes. And that's not surprising given the huge run up that we saw during and after the pandemic started.
So, there are a lot of people who are trying to make a decision about whether or not they should continue with a home search at this time and who are wondering, when is a good time to get in? Is it too late? Am I at this point in the market where, maybe it could, in fact, actually be a great time to jump in? I mean, what would you say to someone that is potentially thinking about that?
I think the following. I think clearly we had a bubble in asset prices, including housing. We had rates that were a lot cheaper, so the actual total cost of home ownership looked more reasonable. Right now, that looks far less reasonable. I think the most important you can do is live where you want to live and live in a place you're going to live a long time. Trading around your housing decision, I think, is not one. It's not like trading a stock. So my guess is prices do come down. The fall and winter are not great times for sellers. That will probably continue. Rates are probably getting close to peaking in my estimation. Rates for housing, mortgages should go down.
All right, Mark Lehmann. Mark, thank you so much for your insight. We really appreciate it.
Have a good week.